GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's like hitting all green lights with your favorite song playing on the radio on your way home from work. I'm your host, Jay Hamilton, and today we are joined by Jamie Coutts, one of the brightest minds in the crypto space. Jamie built the crypto research platform at Bloomberg Intelligence. He's currently the chief crypto analyst at Vision. And if you're like me and you have expectations to profit 6, 7, or maybe even 8 figures in the next 12 months, the opportunity is here. It's right in front of us. Then you probably have a few questions. And I was thinking about mine, and that's the way we're going to approach this episode with Jamie today. Is I have 3 questions that I have, which is first, when is this cycle going to end? Jamie has some research wizardry he does to pull together how to predict that. We're going to talk about what are his top 5 conviction tokens for the next 12 months and which sectors will outperform. And I think this part is so important. Not only does Jamie have some great analysis here, but if you want to play chess and not checkers with your investments, you need to invest based upon narratives. You need to invest based upon sectors that are going to outperform, not just tokens, which is a little bit more like gambling. So stick around to the end for all of that. Now, if you want to be a pro in this cycle as well, you should probably check out Milk Road Pro. Hit the link in the show notes. We got a brand new report out that you guys are going to absolutely love. And we just need to take a minute to hear from our sponsors who make this show possible. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Jamie, welcome to the Milk Road Show.
Hey, Jane. Nice to be here.
Yeah, man. Great to have you. Okay, let's start off with my first question, which is going to sound pretty simple, but I know it's not so simple in the way you approach this is, when is this cycle going to end?
Okay, so the answer to this question is I don't know. No one knows. But the best we can do is try and draw comparisons from history to give us a sense of, the probabilities of where it can end. So the way in which I do this is, firstly, I've tried to, over the years, understand what drives crypto prices. Well, let's just talk about Bitcoin here because it is the benchmark asset of the space. And if you just look at some of the global macro factors, liquidity factors, not just liquidity, but sort of the variables that also affect liquidity. So not just talking about the total money stock or central bank balance sheets, but there's a raft of different factors. When you look at the correlations or when you try and regress some of these factors to see what the relationship is like, you get some fairly strong relationships between these liquidity and macro factors. And so from there, you look at how they've sort of behaved, the patterns in liquidity and these variables. And then you sort of look at the duration of the cycles that we've seen before. And then you do what every analyst does, is extrapolate forward and try to work out on the probabilities of what will happen based on the past. So the analysis that I did for Real Vision is just really a evolution of thinking that started maybe 5 years ago when I used to just look at things like the central bank balance sheets and sort of extrapolate from there. And that actually has a pretty strong correlation, but it doesn't help necessarily with exact timing around the tops. It does a pretty good job at the bottoms because when central banks do any kind of policy reversal in terms of like adding liquidity, markets react on a dime. But markets are forward-looking mechanisms. Mm-hmm. And so central bank policies, when they tend to turn negative, for a lack of a better word, or tend to withdraw liquidity, markets will anticipate that and move before that happens. And therefore we get tops in risk assets, but especially crypto, because it's sensitivity to liquidity months in advance of what's happening with central bank balance sheets, global M2, probably all the things that you've heard about and people are talking about on Twitter. So looking at sort of where we are today, if you look at the global M2, global money supply, which is just really an aggregation of like the largest economies of their money supply, priced in US dollars, which is a very important point. because what the dollar does is very important for global liquidity and risk assets. So pricing it in in US dollars is a very important aspect, because it's, in a world where most debt is denominated in US dollars. When the dollar appreciates, everyone who owes US dollar debt feels the pinch, especially if their earning or their revenues are in local currency. So it's very tiny. We're seeing that right now. The DXY is broken above a pretty important resistance level at sort of 105, 106, and it's now sort of 109 or 108 today. So we're in sort of a breakout, and that's definitely putting some pressure on markets. So getting back to the point, Global M2 went through a huge expansion in 2020, unprecedented in many ways, because it wasn't just central banks, it was also governments doing sort of direct to consumer or direct to voter stimulus through stimulus checks and whatnot. Not going to get that this cycle, not by a long way. We've got a new administration that's actually going to cut costs or cut government spending, hopefully. And then so we had the expansion in 2020, 21. We had a roaring bull market. Markets anticipated inflation was becoming very problematic by the end of 2021. We peaked and we fell in the vicinity of 80% for Bitcoin and 95% for most altcoins. And then we bottomed at the end of 2022. So this model allowed me to basically go bullish when I was at Bloomberg Intelligence on December the 5th, to say, right, the new bull market has started, and it's effectively been a one-way direction since then. Of course, we've had pullbacks, but to be expected. The interesting thing here is that global liquidity hasn't really gone up a hell of a lot, not as much as you would expect for where we are in the cycle. We're post the Bitcoin halving. Usually, central banks, just by nature of the debt refinancing cycle, are really adding a lot of liquidity right now. And the reason they're not is a function of the fact that inflation's out of the bag. And so they have to optically be seen to be doing something about it. The thing that I sort of come back to when people start worrying about inflation, and of course inflation is a problem. I'm living in Australia where the cost of living crisis is out of control. But central banks don't care about us. They care about governments. They have to make sure they can finance government spending. And when interest rates are at 4.55% in US dollar and US 10 years, they've got a problem, right? So the amount of interest that the US government is paying to service the outstanding debt, I can't remember by orders of magnitude where it is, but it's like, I think, the second or third biggest line item on the US government budget right now. So central banks are there to serve governments, not the other way around, as much as they say that they're independent. The point being is they need to do something to get yields down. They need to make sure the dollar doesn't keep rising and destroy global risk. And they'll probably start adding liquidity very soon, as much as it doesn't feel like it right now because everything's very tight. And then really global M2 at about 104 trillion usually expands around 30% in each cycle. So it bottoms at low 90s this cycle. And so from my extrapolation, we've got probably, another 20 trillion. And if you look at the sort of the phases of the expansion, really that led me to think that on average, Q1 of 2026 would be when global liquidity starts to pull back or be reined in. Now, maybe it's not as big this time around because you've got a different administration, you've got a different Treasury Secretary, he's got a different view on monetary and fiscal policy. But the point being is that even the Trump administration wants rates lower so they can service the debt and get on with their job of delivering growth and reforming the US economy. So, Q1 of 2026 is kind of where I thought it could potentially end. And then that sort of, if I just sort of peel back when risk assets tend to price in that led me to say in a research report for Real Vision for our pro crypto community, it was about August of 2025, give or take. There's bands around this before and after. And that's sort of where I anticipate things to start looking like it could potentially, it should top. But of course, markets will overshoot and undershoot depending on what happens, in the real world, not inside analysts' models.
Yeah, I mean, At least you're got a model and not just a prediction, because everybody's got a prediction. You're covering a lot of research and a lot of good thinking behind this. Okay, so let me just summarize this really quickly. Liquidity moves markets more than anything. We predict liquidity will go up consistently throughout 2025, ending around Q1 2026, move backwards from there. We get to a Q3 2025, you're saying August, of the peak of the market. You did mention that M2 is not going up yet, and that seems a little bit off. Is there anything, what would you be watching for that would make you say, like, oh, M2 is not going to increase at this 20 trillion rate that I think it might? Is that a possibility, or is it literally just like slam dunk, this is going to happen, don't worry about it?
Yeah, global liquidity, or sorry, global M2 at 104 trillion is up from 93 trillion at the bottom of 2022, around sort of November 2022 when it was bottom. So it's up now. What drives this is two things. It's credit creation in the economies that make up the aggregate, but also the dollar. So if the dollar, to answer the question, I think it's almost a formality that it goes up. It doesn't feel like it right now because the dollar is rallying hard, but that to me signals that central banks are going to start really being very concerned that this could unravel things. And ever there's dollar strength, things break. So it's almost like the more the dollar starts to rise, the closer we get to interventions. But that just means that in that period, that markets risk assets usually underperform. Like we've seen, I highlighted this really in early December. Now, no one wanted to hear it because there was the Trump post-Trump rally. But I was saying, like, under these conditions, generally crypto doesn't perform as well as it does typically. Of course, we had a pullback, but we haven't had much of a pullback. 10 to 15% is really in Bitcoin. Now in alts, it was about 25%, maybe more in a lot of
maybe
them.
more in some.
Yeah, which seems about right in terms of the beta that they have. But essentially, that just means that the secular trend, right? So there's two things that I look at. The monetary, there's two trends basically that underscore why you should be invested in crypto. There's the monetary situation, the debasement that governments and central banks need to do to service the debt, ongoing, unrelenting, and then the secular trend towards blockchain adoption. So it just tells me that the underlying bid for blockchain assets is very strong because we didn't really see much of we didn't see as big a pullback as I would have anticipated. The dollar is still very, very concerning. So I think that gets us to a point where, number one, central banks should be, according to my thinking, whether they will or not, of course, is a different thing. They should be enacting measures. And then the second thing is that really when that happens, the asset class will continue to explode because really the relative strength of the performance during December and into early January has been pretty strong, I would say, given the macro backdrop. So I think we do get to, that 120 trillion plus by the end of it. But really the defining variable is the dollar.
Okay. And if you're watching the dollar, what are you watching for there? What do you want to see? What do you not want to see?
I don't want to see, if for me being exposed to crypto asset class, a DXY breaking above 110, it's now 108, is very concerning. Remember, it got to 113, 114 at the peak of the inflation scare in 2022. And we had all things break. We had UK pension funds pull out the silver bowl, asking the central banks to help bail them out, which they did. There was trouble in Japan. There was a banking crisis in the US. Things unravel pretty quickly when you've got what they call the dollar wrecking ball moving through emerging markets and risk markets. But it's the banking system that is really where the action is.
Now we don't have those inflation concerns this time, and hopefully we don't have any of those black swan events either. Not that we know of right now.
Inflation's sort of higher than you see. The central banks are now moving the goalposts. It used to be a 2% target. Now they're trying to get people comfortable with 3. We'll live with 3. If it gets to 4, they'll probably have to take the foot off the accelerator if they're adding liquidity. because optically they have to be seen to be doing the right thing by
for us, right? For us, for the people, right?
Right. Of course.
Right. Okay. Okay. Let's pause there for a second, because I want to shift gears, because we could go forever on macro talk here, and I want to shift to my second question that I had at the beginning of the episode, which is, what are your top 5 conviction assets right now? I'm going to say your top 3 because we talk enough about them on the show. So you got Bitcoin, ETH, and Sol. Would love to know your predictions for each of those 3 in the next year. Just give us your predictions. But then I want to go to Sui and Near. Those are tokens that we don't talk as much about on the show. And when I want to be clear, when you say your top conviction tokens, for everybody listening, the way Jamie thinks is very much based on probability and risk reward. So this isn't necessarily like the meme coin or the AI agent that he thinks is going to 1000x. This is what he believes to be a strong investment, a high conviction investment. So give us your predictions for Bitcoin, ETH, and Sol, and then let's talk about Sui and Near.
So I'll start with Bitcoin. If global liquidity, if global M2 and central banks come to the party and add liquidity, or at least QT is ended and various measures are implemented that are not called QE, because they'll call them different things, but it'll essentially be adding, like, the term QE I think is dead. Like,
no one uses it.
They have PR people that go, look, people have wised up to what QE, and they're fine, we'll call it by some other name, and then we'll tweak around.
M2 is expanding. That's
yeah. Essentially, they're just trying to invigorate banks to lend, and that's what drives M2. It's credit creation by the banking sector, which is the creation of new debt, which is currency in our fiat world. So based on that extrapolation, it appeared to me, based on the modeling that I did, that Bitcoin should get to about 180. Well, specifically, my model said 189,000, but it was based on different layers of risk. And so anything between sort of 170 to 200, I think, is quite feasible this cycle. ETH, I've actually, I write about ETH, but it's definitely not in my top picks. I think ETH can get to about, I think modeling I did was around $1 trillion. So that would imply a 67,000 price target.
Sorry, so ETH is not in your top 5. Forgive me for saying that then.
Yeah, it'd be close. It's not in the top 5, but it's an asset that I personally hold. It's part of my portfolio. I don't think it'll do quite as well, but I think it's now primed in the part of the cycle will outperform Bitcoin and it'll outperform other assets, but I think other assets will outperform it. So I'm still bullish on ETH. The whole space in the whole, collectively, the market cap of the crypto ecosystem based on the top 200 coins. And I use an index provider called Bitformance, which is actually something you can basically access through their website as well. Top 200. But I thought that the total market cap, so it's about 3.5. The top 200 is about 3.3. And so, and like, I did this modeling a couple of months ago, but anyway, long story short, I think the space gets to about 7 or 8 trillion this cycle. And that would imply a Bitcoin market cap, if you look at sort of Bitcoin dominance at around 50%, is well over 3 trillion. Now, the other sector, if you look at that in terms of just the beta and the outperformance you generally get from when you go out the risk curve in the space, when Bitcoin does that sort of performance, you can start sort of thinking about like where other sectors will sort of get to, and so what some of the other L1s could potentially get to. The two L1s that I'm really interested in and have written about for the pro crypto community was Sui, which we picked up at I think $1.60.
What a trade! Well done.
Yeah, so he's an interesting one. So I've probably jumped a little bit ahead because we haven't talked about Sol. So Sol, has, I think, suffered over the last couple of months because there's been sellers, of the estate, and there's also been profit taking after the exceptional run that it had in the first half of this crypto bull market. But I think it's consolidated well, and then you've got all these positive catalysts that are starting to come through, whether it's just the level of fee activity that's happening on the Solana chain at the moment is now, on some days, DEX volumes overtaken ETH and the ETH network. Then you look at fees relative to the market cap, and it has so much more growth for expansion from a valuation perspective. And yes, for those that are, everyone on your channel, Jay, understands that there's value in these crypto assets. Fees is like the underlying metric, which really is like the golden source of truth. But I still speak to a lot of TradFi people, and you have to tell them and explain to them that these things are actually cash cows and making a lot of money. Now, the multiples on the fees is well above what they would be paying for, and well, maybe not Nvidia because that's trading on a crazy multiple, but like other tech stocks they're used to. So the point being is they're growing a lot faster than tech, and global adoption is still at the very early stages. So there's, in some cases, depending on liquidity, the multiples are justified. So I think Sol will do really, really well. You've got Financer coming out, and you've got all of this AI activity. It's really happening on two chains right now. So if you really, before we get into that whole discussion about AI, if we have time, if you want to take a picks and shovels approach and not try and play the AI agent game, which I think is as treacherous as picking meme coins, you want to own the assets which are going to benefit from the activity. And the activity takes place on two chains. And so that's Base and Solana. So that's now a de facto play, which I think we'll see Sol actually start to appreciate or outperform. Now, the other two, like Sui is an interesting one. If you look at sort of the way
give me your price target for Sol quickly, just before we move on from that. I think you said 660. I think is what you predicted.
That's right.
Does that sound right?
We can bring it up. It sounds about right. I think
I know you wrote this report maybe a month or two ago, so I'm stretching your memory.
No, actually, I wrote this report back in October, which was great because it's played out.
It's going well. It's going well. You know what you're talking about, turns out.
Yeah, so I think Solana, I've got it here, and we can show this, I'm sure. Price target, I put it into market cap terms of more than 300 billion. So at the time it was 74. So that was a 450% return over the next sort of 12 months, in my thinking. Right. So the other one is Sui, and if you're trying to look for like what's the next up and coming L1, there's a multitude to choose from. Like we've got at this point in time an oversupply of block space, right? So it's an incredibly challenging task to try and pick the next Solana, the next up and comer. But Sui is, I think, on a growth trajectory where number of active addresses, the number of the fee revenue that they're generating is starting to convince me that they are the next breakout L1. Now, they have an excellent team, and they've got not a new programming language, but because they built this while the team was at Facebook, which tells you about the caliber of the team. But they've brought it over to crypto. And the reason why it's really interesting is that it's object-oriented programming language, which is better suited to transfer of value type transactions, which is essentially at the core of what blockchains are. And what that means is that it does two things. Number one, it removes a lot of smart contract risk. And number two, it attracts Web2, who are familiar with the Move language. And the creator of the Move language, one of the creators of the Move language, is part of the Sui team. So I found that quite interesting, but it wasn't enough for me to get interested until I started to see, because I track the fundamentals, the key metrics. There's tons to look at, but if you distill them down into three: active addresses, fees, and also transactions. You could probably add TVL in there. Now, all of those metrics can be gamed. So there is a lot of spoofing, a lot of sort of junk activity that's done for whatever reason that does, I guess, distort. But in my research and my analysis, there's enough of a signal there, if you know how to put these things together, that tells me this has actually got there is network growth, and network growth is what drives value, because as you start adding more users and as dApps start to join, the complexity of the interactions creates that exponential growth profile, Metcalfe's law, and drives that asset forward. If there's enough of that, then it starts to build upon itself, compound. So Sui's got the potential, but it's really, really early. I think it's got active addresses of about 800,000. Now, a lot of this is sort of like incentivized from the treasury, right? So they're paying for users to a degree. So you have to sort of take that into consideration. But because of the underlying tech, the speed, the throughput, I think, and the team, that it's starting to emerge as the L1 that could be, by the next cycle, Solana-esque.
Yeah. Sui just also seems to have it has the attention. which is half the battle
Yeah.
in any industry, but especially in crypto. And it's really captured the attention for, I would say, 6 months or so. Like we've been talking about it. It's not a major by any means, but it definitely has achieved that attention, which honestly gets me very excited, especially because I believe that the team is capable of creating that attention. And that's really what you need. Attention doesn't create itself. You need to have the team that can do that, or have a
Yeah.
meme coin like Pepe. So
Yeah, certainly a great team.
let's go to before give us your prediction for Sui for this cycle. What do you think Sui could do in terms of market cap?
Yeah, so I thought it could basically get to around 50 to 60 billion, if my memory serves me right. So, that's about a 10x. That was based on where it was in October. So it's done pretty
10x,
well.
yeah, in October. So that would be about a 4x from here.
Yeah.
We're sitting at about 15 billion right now.
Yeah, and that's pretty optimistic. I mean, like when you actually look at the amount of supply that has to be vested over time, and that fully diluted market cap would be somewhere in the vicinity of 400 or 500 billion, which is more than where Solana is today. But that's kind of like where things can potentially get to in a crypto bull market.
Mm-hmm. Yeah, things don't make sense sometimes when you get into a bull run, and it can seem crazy, some of these numbers, but they're not. We will see some things go this direction. We don't have a crystal ball. Do your own research, make your own decisions, not financial advice and all that. Okay, let's go to Near.
Near was interesting. It came up on my radar at the beginning of the year because the explosion in activity on chain. Now, Near has not incentivized. Actually a very different play, and that's the reason why I liked it. What do I mean by that? So Near went from essentially no users in Q3 of 2020. 2020. Where are we? 2025. So 2023. Time flies. No users, maybe 20, 30,000. There was no activity on the chain, and it just went vertical. Now has about 3 million daily active addresses. Now, what's interesting here is that it's very concentrated in a couple of dApps. One of the dApps that Near is which is driving a lot of the usage is actually a web app available mainly in Asia, and it's essentially a shopping app. It's on your lock screen. You can opt in for this application right on your phone, which just sends you based on where your location is, discounts, deals for shopping. Like it's nothing genius. What's genius is that in order to facilitate an extremely large number of transactions, they couldn't use traditional rails because the fees on Stripe and Visa just did not make it viable. So they moved to Near as the infrastructure for processing payments. Now, they do a ton of transactions, but a lot of the transactions don't hit the blockchain because they batch them. So they're effectively representing about 25 million users. But on chain, it shows up as about like 2, right? So that's fascinating to me because it was the first consumer application use of blockchain that really went mainstream. The point being is that as a user of that phone application, you have no idea that you're using blockchain. And that's the point.
That's it right there. That's it right there.
Right there.
Wait, what's that app called?
It's called Kai.
I've never even heard of this.
It's in Asia mainly. It's in other countries as well. Apparently, they're rolling it out globally. So I thought, based on the level of activity, based on the fees that it was generating, relative to the market cap, Near looked undervalued. Then you layer on the fact that Ilya and the other founders are OGs of the AI space. I mean, Ilya wrote the Transformers paper in 2017, co-wrote it. Near was an AI company that wanted to pay all the contributors and developers globally, but couldn't use traditional payment rails. So they started a blockchain.
So they started Near.
Right. And now they've gone back to their roots. Now, they're sort of, I would say, late because of the meta that's grown up around the space and has happened on other chains. So, whether Near can execute on their very, very bold strategy of building the world's biggest LLM based on the parameters, which is like 1.3 trillion versus like the open AI models, which are hundreds of billions at this point, is extremely ambitious. But and that ambition, which I think is very interesting. At the moment, they have not attracted the sort of activity, the DeFi activity, which drives the value to the token as much as Solana, well, by any stretch compared to a Solana. So you're really buying, the potential for them to execute on this strategy. But I like the fact that they have applications which are completely different to essentially a lot of the value in crypto is driven through the DeFi space into blockchain fee revenue. They have sort of focused on another thing and consumer applications, which I think is a nice diversifier. But admittedly, they need to drive DeFi activity to improve the token. And if they can execute on that and they can execute on the AI aspects, I think based on where the market cap is, it looks undervalued to me.
Yeah, I love the. I did not know about Kai, and that's huge for Near. To me, Near has the AI narrative, and so that alone is going to have such an effect, which sort of leads to our last question here. And I know we're nearing time, Jamie. Do you have a few more minutes to hang with us to finish off?
Yeah,
Talk about
sure.
DeFi and AI. Okay, great. So want to chat about which sectors will outperform in 2025. You and I were chatting before the show about DeFi and AI. You wrote a report recently on DeFi renaissance, DeFi making a comeback. It had its moment back in DeFi summer, and certainly kind of lost its luster. But since really in Q4 2024 had a great rip, and for a lot of good reasons, a lot of incredible fundamentals there. The fundamentals have always been there, just the users were struggling maybe because of regulation for a big part. But tell us your thoughts on DeFi.
So DeFi just underperformed for a long period of time. So a lot of the analysis that I do, I look at relative charts based on sector performance and things like that, and then look at sort of if a sector starts to relatively outperform, look at which assets within that sector are outperforming the sector as well. So it's sort of layered approach, but you had a situation where, as you pointed out, like regulation, well, the lack of regulation, like this completely vindictive out to lunch regulator,
just crazy,
had ruined the opportunity. And then you started to see amazing thing. Like there was a presentation made by one of the Fed governors. His name is Waller, back in September or October, where he made a presentation on how complementary DeFi is to the banking sector. Like the opportunity to capitalize on this technology and remove friction from and transaction costs and all the pain that we experience with our financial institutions is so immense. Like the one thing I come back to is like you can't get out of this debt spiral as a government just by artificially suppressing interest rates. You have to grow. And so global GDP is maybe $100 trillion. The banking, the financial services industry is about 20% of that, roughly. Now, most of that is like they're providing good services and whatnot, but quite frankly, they're in other aspects they're not. And the amount of friction that we pay for settlement fees and settlements that take days, but the fees that are involved, that's friction that's taken out of the global economy that could be unlocked to actually grow our way out of this debt spiral. So DeFi is an answer. And I think we're on the cusp of DeFi just being accepted. And when I think about traditional investors, when they come into the crypto space, where will they sort of focus their attention on first? They'll look at blockchain, they'll look at Bitcoin, they'll look at blockchains themselves because fees make it easy to model. But DeFi is just a sector that is easy for them to get in a sense that you can look at the number of users, you look at the services they're providing, compare them to traditional world sectors, look at the multiples they're trading on, and start making some qualified sort of investment theses or calls. If you look at DeFi applications relative to blockchains, if you compare the market cap divided by the fees, in some cases these DeFi protocols are trading at 90% discounts to Solanas and Nears and Ethereums and the L1. So the question is, where does the value accrue over time? I think the value accrues up the stack away from the blockchains to the applications because they're the ones that really own the customer. And that over time means that the value balance actually should start to shift. So I'm very fond of like the DeFi sector for that reason. I think, there's like Aerodrome on Base looks attractive because they're benefiting from the AI meta, but also just doing a ton of activity. And I think these exchanges, decentralized derivatives protocols, is the technology upon which tokenization will leverage eventually. So the Uniswaps of the world are showing the way to basically trade efficiently assets, and as more assets come on, I think they'll naturally benefit. As regulations lift or become clearer, they will benefit. And as the traditional growth investor that owns technology or invests in technology stocks starts to look at blockchain, they'll be looking at DeFi.
Yeah, it sounds so obvious when you break. It's a better technology to do something that is not working as well as it could, and I had never really thought about it from the perspective of it also could get us out of the debt crisis by increasing GDP. I mean, win-win. Let's go. What are we all waiting for? It sounds, yeah, it's going to happen. And I think you mentioned a couple great tokens there. The other thing that could get us out of the debt crisis is AI. What are your thoughts on crypto and AI and that sector for 2025?
I think it's going to drive the meta until the cycle ends. I think I looked at Google searches for the big hype cycles of old. So whether you're looking at crypto or we're looking at DeFi or NFTs and looking at their trajectory in the hype cycle, it usually goes for about 6 to 12 months. You could argue that the AI agent meta started in November, so I think we've got at least 4 months to go, and that sort of should dovetail into the peak. But I think there's a distinction to be made here. A lot of the AI agents, they operate on a spectrum between dumb AI is not the right term, but
no.
Level one versus
use dumb. Let's use dumb. I like that.
Yeah, but they've got an IQ higher than me, so
I was gonna say, but they're smart.
But they're just starting off. Like the common criticism that will be leveled on it is like, oh, it's just a social media bot, or it's an influencer that can create video. Well, I mean, that in and of itself is amazing. The utility comes from the complexity of services that they start providing beyond just what they're doing currently, and it's all coming. So it will drive DEX volumes, it will drive derivatives volumes, it will drive new services on chain, and so it is the new application layer for blockchain. It abstracts the complexity of using a wallet, of using smart contracts, and will be in time the interface for boomers, Gen Xers like me, and everyone who's not involved in the space, who just finds it more complex than it's worth its effort, because you'll just be talking to your AI and your AI will be executing. When you start thinking about, BlackRock and all these financial companies wanting to tokenize things, the composability of blockchain and more asset trading and more value transfer with a simple to use interface like an AI that knows you and can start doing either things on your behalf or either self-directed or directed by you. Mm-hmm. That's all to be determined, but it's incredibly promising. So the AI agent space is just like blowing up. I don't think that's where I will be investing.
Okay.
I will be investing in the tooling that creates the agents, so the infrastructure plays. And it's so early that there's going to be tons of disruptions, but you've got the leaders at the moment, the AI 16Zs and the virtuals, Zero Bros. They're all sort of building the platforms upon which agents can be created. There'll be more to come. It'll get diluted. It'll get crazy. But I think that some exposure is warranted to those infrastructure plays, even though they're red hot and they've run up a lot. That's why I always say to my subscribers is it's all about position size. If you're putting 50% of your capital in one of these hot sectors after it's run 500% over the last sort of 3 months, then you're going to feel pretty dumb when it does the typical 50 to 70% correction the next day. But if you've got the right position size, you can sort of look through the volatility and hopefully, pick up something that will give you some good alpha over the duration of the cycle and won't cause too many sleepless nights or fights with wives and husbands.
Yeah, and that's really one of the keys to investing, right? Is just set yourself up to not feel like you're going to puke when something happens in the markets that will happen throughout a bull cycle. So don't think about think about it before you make an investment. And I agree. Everybody should have some allocation, I think, not financial advice, but I love the virtuals. We've been talking about virtuals on the show, AI 16's that as well. And then here's and Cerebro as well. But here's the tough part is like now there's so many, right? Like you can just see all the ones that are starting to pop up, and it's going to happen very quickly. And it's getting tough to know which ones have been building for a few years versus which ones are just catching the narrative and catching the meta. And so
Yeah.
it's going to get tricky. And so I think have the stomach, because it's going to be ups and downs. So I think I always I like to make those high conviction bets for not short term, like hold it at least for a good part of the cycle.
Yeah, look, I totally agree. You're going to get a lot of dilution in the space, but I think I sort of fall back on the notion that network effects are incredibly important, and so you have got leadership coming through from the virtuals and the AI 16Zs already. If you look at the amount of downloads or the GitHub activity from AI 16Z's open source, AI agent framework and model, that is creating the network effects. I think that should see it do reasonably well for the rest of the cycle. Of course, there'll be new entrants all the time, but virtuals is slightly more closed model from what I understand approach. So that's fine. I mean, we've got Apple and we've got Google, and they have their own approach, and I think there's definitely room. But I think the early leaders I still think will be okay because they've got the network effects and the lead on other ones.
Yeah, very well said. Jamie, this has been a fantastic conversation. Thank you so much for your time today. Everybody listening in, if you don't already follow Jamie on Twitter, you're going to want to. If you guys don't follow Real Vision, you're going to want to follow them too. Twitter, YouTube, all their podcasts, all their content is amazing. Greatly appreciate everything that you shared with us today. Thanks so much for joining us, Jamie.
Thanks very much for having me, Joe.
Awesome. Thanks for listening in, everybody. We'll see you again tomorrow. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.